Hello, everyone. Welcome back to the RacialInvestor.com's data brief. La, 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 la. I don't know. I always try to come up with a new intro for these videos. I don't know whether you find it enjoyable or not. Um, but here we are, TGIF. Oh boy, thank God it's Friday. Although in this crazy crypto world now, even the weekends we don't get any reprieve. But welcome to Volatility Central. If anything, all of you watching this video, if you've learned one thing through this period, and of course you'll remember this as your life goes by, don't fight the Fed. The Fed is, actually, and it was kind of cool because I got one of these big digital TVs. I'm sure everybody has them nowadays. But I was watching I think it's a Roku TV, I think they call it anyway. And it's got the YouTube thing built in, so it's just like click, 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 and you can go through the YouTube shorts, and up pop Beamish saying, don't fight the Fed. Benner cycle. Slow and steady wins a race. Don't take no wooden nickels. All that kind of fun talk. So, geez, you're getting it from 20 different directions. And actually, somebody even commented, I noticed a comment on the YouTube videos, love you, Brian, but there's no way I'm going to sit and listen to you for 2 hours. So, if anything, I think I've heard that the team has made a concerted effort to chop these videos up, make little short clips, and also sort of little bite-sized 5-minute clips and stuff on concepts that I'm imparting. So if anything, we should see lots of content coming down the pike. Also, too, I heard and I saw that Julian is working away on shorts. So you might see a little bit more of him on the YouTube channel and all that kind of stuff. So thank you very much, Chris, for helping out in that regard, whatever you're doing. And let's just keep getting this message out. But at the same time, too, this isn't the time to go and bet the farm on anything right now. This is a very difficult time of the market. Mr. Benner has suggested, and if anything, that's the one thing I really like about TRI is I think we do pretty good quality research here. And whether it be things like January barometers, election year cycles, but also too, just really simply put, this is a study that goes back like hundreds of years. I think Benner first put this out back in the early part of the 19th century. I mean, that's how old this is. So interesting how the cycles basically are just as apt today as they were then. And you can see 23 C. What does C mean? Does C mean you're going to go be selling all your products that you bought cheaply at inflated prices and going and buying Lambos and exotic properties and islands and stuff? No. If anything, what C says is that you should be loaded up on cash and getting ready to buy. And when opportunity does come, you are ready, willing, and able to pull the trigger. So probably in this kind of environment, actually in that short that I was making reference to, I also talked a little bit about how it looks like crypto's probably, especially Bitcoin, probably very similar to the sort of 14-15 cycle bottom. And that took a full year of just basically going sideways to ultimately put in a big fat sort of, weekly or monthly W's and then start to move our way higher. And of course, as we, the rule is that we should start getting serious about Bitcoin rallies and stuff about 6 months prior to the halvening event. So just keep that in the back of your mind. Anybody, hell, you can do a Google search. When is the next Bitcoin halvening event? And about 6 months ahead of that, that's when we should really start getting serious about all this. Right now, I think we're in a chop market. And the market is going to drive you crazy chopping back and forth. Am I a bull? Am I a bear? Am I a bull? Am I a bear? On Twitter, obviously with the Bitcoin price coming off, it's funny because, we run multiple different trading plans. And one trading plan that I'm running right now is based off of this algorithm that we recently built. And as you can see, the algorithm actually had us bullish there about a week or so ago. And I was actually really surprised. 2 or 3 days in a row, the algo just sat there and said, yeah, I'm at the bottom end of the range. I'm not breaking any lower because everything that's going down is going down. So as a result, technical score is really not going to change. The trend's exactly the same. Did notice last night, thank heavens, the engine itself doesn't appear to be broken. It is actually operating. We just had a couple days there where the data was exactly the same. Did have somebody yesterday sort of message me saying, is this thing broken? Is it actually working? And from what I understand, everything is operating operating, full capacity, full steam. We did have somebody point out recently that some of the data that we're using because we're using 2 different sources for the crypto top 30, and of course crypto, everything's very crypto. So like when we're looking at the broader stock market, things like the technology, the NASDAQ 100 or internet content provider, communication services, all that kind of stuff. That's all stock market. It's all one source. But when we do things like Binance and Kraken and crypto top 30, some are on Binance, some are on Kraken, stuff like that. It's a little bit challenging. So the feedback that I got, and I think it's a really good idea, that I think at the top of each of these pages we should have like a little, what's the system health? When was last time system updated? Is the system updating correctly? When was the last data feed we had? And any of the data feeds particularly down. But from what I understand, like I said there a moment ago, the system's actually operating. Nothing's really broken here per se. It's just, this is an algo trader's life. And this often happens with people with trading algos. And that's why you have to go through not only a past back test, like a lot of people like to do back tests, and Chris, somebody's asking for the Q&A document there in the lounge, and I guess because it's Friday and the after party, we'll talk a little Q&A, give people the opportunity to ask questions. So Chris, if maybe you could throw that in the lounge, I'd appreciate it. But the point just simply being that if you trade algos, you have to understand. I remember one guy who traded an algo during the Z coin rush there back a few years ago. There was a whole bunch of coins that came out, one after the other, and they all started with Z's. And this one particular coin, the algo, went absolutely crazy, and it paid like 3,000 Bitcoin for one of the Z coins. It's like, uh-oh, that's not good. So it's always good to test this in real time. And just, if you're like, oh, well, I've never really traded before, and hey, this website, this guy says he has an algo. Do not just go and blindly hey, this guy says buy, so I'm going to go and mortgage the house and buy. That's just asking for trouble. In our education program, in fact, the very first thing that I tell everybody is, and this is all about you just trying to figure out what kind of trader you are. Any type of setup, any setup whatsoever, whether it's an algo, whether it's a 3-step setup that we teach in like our level 1 program, whether it's a range setup, whether it's a trending setup, you always have to back test. And then what I would say is forward test as well. And most people in the market don't like to do forward testing, but forward testing is nothing more than actually testing the system in real time, seeing what the signals actually look like, and can you actually even execute on the system? Because keep in mind, it's one thing to have a trading plan. It's quite another to actually determine that you can actually do it. The good part about this particular trading plan that I've built, and of course I got to have 20 trades before I even think about, whether I'm actually even going to start throwing some serious money at this. What I would personally prefer you do is do 20 paper trades. Everybody hates when I say paper trading. It's almost like this is like kryptonite. As soon as you say, well, it's in your best interest to paper trade, people are like, oh, well, I don't have any money in it, so I'm not gonna pay attention. It's useless. And if you actually tell me that, then that tells me that you're not gonna make it as a trader. I can absolutely guarantee you. If you cannot commit to actually paper trading and making darn sure that you can actually execute setups, that you can control your own personal emotion and without money being on the line, but you have to execute properly and consistently and accurately. If you can't commit to that and you can't do that, then there's no way in hell you're going to make it as an actual trader in this world. So I always say that, best thing for you to do is start out with 20 paper trades, then do 21/10 account size trades. And again, you're looking for, can I actually follow the process? Can I actually do this? I'm not even concerned about profit margins or anything like that. If you can get through 40 trades, 20 paper, 21/10 account size trades, no mistakes, the setup is actually producing the desired sort of performance. Ideally, I'd like to see 60-70%, yada, yada, yada. Then, okay, great. You can start trading big bucks with this. So, as it stands right now, we just started this, and I just wanted to get this thing going ASAP. And I'm about maybe, I don't know, half a dozen trades in. I'm actually pretty pleased with the fact that we are actually up on this account. It's just a little account. It's just a couple grand. And I started with like $1,600. Things are fine. And actually, in my perception of this, because the only purpose of this portfolio is just to simply outperform. That's the only purpose. So if I happen to be long this plan because the system told me that I should be long, and Bitcoin price goes down, but I also am going down, but I actually don't really mind that. That's not that big of a deal to me. But I do know that there were some people on the site that were a little bit stressed out with what we saw out of crypto yesterday. Ironically enough, at the very same time, I have another trading plan that actually had me going short Bitcoin because it's just trading setups. Whoops, I lost my screen. What the heck did I do? Clicked the wrong darn button. Like I'm running like day trading plans in the futures markets, but also too, you guys have probably seen this, and I did this last Sunday, where I pulled up, and I like this going forward. I think it's a good habit. Saw Paul do this on the weekly Wednesday shows very consistently with his weekly newsletter. I think it's a smart idea, so I'm going to try and force myself to get into this habit. But do up a weekly chart, then a daily chart, which was this chart. And on the weekend, I had actually thought that we were going to be doing something along the lines of head and shoulders is like that. And I thought we would hold at Collins Pump Chaser Zone. And as you can see, I mean, the one good part about TA is you can see very, very quickly whether your thesis was correct or incorrect. I actually think we're probably going to do something along these lines now. So pretty messy action. We dumped hard. Interestingly enough, this was nothing more than just a 50% retracement of our most recent move. So, according to Mr. Gann, actually, this is pretty normal. As I showed you on the weekly chart, I thought we were going to run into some support against these previous lows and the 13 EMA. We just went blowing through that. Of course, what's the context of the broader market? Well, the context, of course, was that, SI, Silvergate Capital, was going under. And then, I think I heard that the U.S. Securities and Exchange Commission is now like formally gone after KuCoin now. And I was wondering how long that frivolity was going to last. And then I heard something like Um, Ethereum now has been officially declared a security. Oh God! So welcome to 2023, Benner cycle bottom. What, similar to 2014, 2015 kind of idea. Is this going to go straight up? No, I don't think so. And if anything, what should we be expecting? And this has been the message that I've been giving. I reiterated it yesterday. I honestly believe this is what, if we look back in hindsight, what 2023 is going to look like, it's going to look like something along these lines where we attempt to break out. And at that point, of course, everybody and their brother in crypto is going to be uber insanely bullish. Then we start crapping out and breaking down. And I wouldn't be surprised that if we go down and swim against these lows, maybe even take out the lows, everybody and their brother is going to be insanely bearish. Then we're going to swing back to the upside. And of course, everybody's going to get rah bullish again. And then we swing back to the downside. I mean, this is just going to be back and forth, back and forth, back and forth. And ironically enough, the zero-sum game at the end of this year is, I think, we actually are going to be finishing on an uptick, which, again, remember I started off the conversation with you guys here today, that really crypto and Bitcoin, what we really want to focus in on if you are a bull, is you want to position yourself just about 6 months ahead of the upcoming halving event. So, with this idea that the market should probably kind of bottom here into the end of the year, when is Bitcoin's next halving event? And of course, it's always a debate, is it halving? Is it halving? Whatever. But I think the next one is scheduled for this coming spring, which would make perfect sense. Maybe we'll go 2024. So what's about 6 months ahead of this halving event? I'm just doing this on the fly, so sorry, everybody. Next Bitcoin halving is scheduled to take place 2024 on April 22nd now. So, and obviously this is a floating date. It moves forward, it moves back. But in essence, what's 6 months ahead of that event? Well, that's going to be like, October of this coming year. So interestingly enough, that they always say buy when it snows, sell when it goes. If you think about it from that perspective, this should be around the time that it should start to snow. Fall dump, they don't call it the fall for nothing. I wouldn't be surprised if there's some sort of big, political event around this whole debt ceiling debate. I have a feeling that that's going to come to a head here this fall as well, too. And I thought this was a really interesting sort of development here of late is we're starting to now finally see the cracks. Unfortunately, what ends up happening in capitalism is, trends establish themselves, then they just get pushed and pushed and pushed and pushed and pushed. And I think, things like Silvergate is actually an interesting tell. I might argue that FTX and, Sam Bankman Doofus head, I think is an interesting tell. That's exactly what should happen at the end of long bull cycles. And unfortunately, I think that this cycle, because of the sickness and all this sort of manipulation around that, I think that this cycle actually was pushed about 2 or 3 years beyond its natural, normal, healthy cycle pivot. And I actually think that crypto had an extra bull cycle there that I don't even think the experts were expecting. But now that we're on the other side of these cycle windows, and I think that interest rates in particular, and the whole money cycle and all that kind of talk, because they had an extra 2 or 3 years of stupidity in there around that sickness, things like take interest rates to zero, at the same time introduce massive government spending. Governments, of course, don't have this money, so that means that they're just printing money out of thin air, which of course has now led to hyperinflation. It's so sad in Canada now. In Canada, thanks to substitute drama teachers, chicken is now considered a specialty meat, and it's like $27 a kilogram for chicken in Canada. No offense, the chicken is the same chicken as it was a year or two ago. It's the same chicken as it was 100 years ago. Nothing has really changed. It's not the chicken that's the problem. It's the fact that substitute drama teachers have completely blown our currency's value to smithereens. It's so blatantly obvious what the problem is. But now, to justify this, no, actually, chicken is a specialty meat now. Come on. They're all skirt around the problem, and none of them will actually admit what the actual problem is. The problem is, Milton Friedman, right? And I don't need money masters and all that. We don't need to go down that rabbit hole. So anyway, the point of the matter of all of this is that I think they pushed the market a little too far. We got all that woke economics. Can you call it that? Remember MMT? Oh, well, actually, we live in a whole new world where interest rates are never going to go up. Right, whatever. So, the cycles are finally playing catch up. And I think that one of the sort of big shoes to drop here was this sort of notion that, venture cap, these zombie economies. Remember, we've talked about zombie economies. Japan had zombie companies that were just kept on the lifeline for years and years and years and years. I actually believe that Mr. Powell is actually quite hell-bent on reversing this whole crazy cycle. That we're going to try and go back to normal economics here. Believe it or not. And I think the cycle is slowly playing itself out. And one of the shoes to drop here, which I think is very telling, but I think it's pretty normal. We do have some people on the site that are big fans of Miss DiMartino Booth. I can't not pronounce her name correctly. That joke's getting a bit old. Really interesting video that was shared in the lounge, and of course some people on the site are actually going through and writing notes. This is why TRI's lounge and the site membership is so valuable. I don't even know if many people on a lot of the social media and stuff, especially in crypto, would actually even have the interest to go ahead and do something like this. But you can see, Gio, you're a level 1 student here. We all work together to try and help each other out. And I love that about TRI. It's such a great thing. But, I'll even tweet this out. This is a very good
all right, let's do it. Hey, folks.
With Chris's girlfriend. Am I allowed to say that? I don't know.
Sure, why not?
Yeah,
She's
why
a
not?
fine-looking lady. Yeah.
And interesting enough, she actually worked at the Fed, she said, for 9 years. So if anything, she's probably a pretty good lady to listen to, Miss DiMartino Booth. And I actually learned something, and she let it slip out that I didn't actually clue into. But it turns out this guy here, I don't know whether if anything in the after party, we'll talk about it. I don't want to go too down the rabbit hole. But it turns out that this guy is a George Bush Sr. crony. And I didn't even realize that before. I never clued into it. She accidentally let it slip that his background, he actually cut his teeth, made all his fortunes and stuff, working for the Carlyle Group. I couldn't believe that when I heard that. And of course, what a surprise. Now he's like Mr. Run the U.S. banking system banker. Coincidence? I wonder. So I thought that was fascinating that she actually let that slip out. I never even clued into that before. And how ironic, of course, Carlyle Group, associated with a certain presidency, associated with a certain sort of bent of U.S. political. What a big surprise. The socialists, and of course Biden and all that, coming out wanting to just spend ridiculous amounts of money. And what's he doing now? he's basically said, look I've got to put the kibosh on this, and we're going to take interest rates higher, whether you like it or not. And actually watch our recent short Chris put together on the rant about Brian and don't fight the Fed. So great video, right? Now, very appreciative to our lounge. And actually there was another video that was done. It was quite a bit higher that also I listened to. Very, very good. She's spot on. There's a couple, we can get into, probably in the after party, we'll talk a little bit more specifically about the economics. But actually, listening to her and understanding the backdrop of what's going on in this world, it actually makes a heck of a lot of sense why we have this crazy hyperinflation environment. But the good part about it is that the punch bowl is slowly being taken away. And this is a really good example where this was a bank that was just financing out the butt venture capital. Now remember, venture capital is hell, if you guys play in the crypto space, you know what venture capital is like. It's up and down like a horse, you know what. And so at some point you actually should see this kind of fallout happen. Now, the interesting thing about this is it's having reverberating effects right across the entire U.S. banking system. And, I suppose the one message that I would have is I remember back in 2007 specifically, I actually had a really nice sell signal, and I even blogged it out and told all my sort of retail customers at that time, hey, we're getting a big sell signal on the S&P 500, be careful. And that was in like March of 2007. So, remember 2008 financial crisis, the shit didn't hit the fan until like October of that year. So, the point being that through this spring and summer of 2007, we actually started to see the market break. We started to get the rumblings of, in Canada, there was a company called ABC Paper. They started to default one of these sort of venture cap kind of financing operations. Then, of course, we all know about how the U.S. banking system was brought down by the sort of subprime lending, which is technically like lending to the public venture capital, the people that really can't afford the loans, subprime, all that. And ultimately, by the fall of the year, we started to hear about Lehman and Bear Stearns and AIG and all that. So it is interesting that this might be sort of the first sort of shoe to drop. And it makes sense because in 2008, the shoes started to drop in March of 2008. That's when people actually started talking about Bear Stearns. And then, of course, ultimately, it got into hot water there through the summer of that year. And then, the spillover effects too big to fail, blah, blah, blah. Down the road, Lehman went down. And then, AIG was about to tip over, but then the feds came in and bailed them out. So you're already starting to see the ripple effects. What I thought was really interesting was that at the exact same time, this jerk now is actually being held under gun because he might actually be wrapped up in the Jeffrey Epstein scandal. Now, that would be poetic justice. This guy's basically, the irony of it all is we get angry at things like Chair Powell and stuff like that, but this guy, this is Chair Powell's boss. This is the guy who tells Chair Powell what to do. And along with the Goldman Sachs cronies and all that you never hear about in the public. Like this guy, whenever I show you pictures of Potter and stuff like that from It's a Wonderful Life, that's this guy. Well, you say he's untouchable, but I've seen how this kind of stuff, they used to say that the Harvey Weinstein, was untouchable. You could not touch him. It's funny, I was listening to Ricky Gervais, and he was sitting there at the Hollywood Awards ceremonies poking fun at the audience because they are all the Hollywood people that let Weinstein get away with the shit that he got away with forever and just turned a blind eye. Well, you might argue, same sort of thing. So it's fascinating because there's a side lawsuit that somebody is suing JP Morgan. And now it would just be poetic justice if this guy was brought down with the scandal. Just beautiful. But anyway, so On top of the fact that you've got this sort of sideshow with about Epstein, but you also are starting to see some cracks in the actual banking system. And hey, don't get me wrong, Andre. I see Andre over there, YouTube, commenting away. I'm not saying other people's poop stinks any less. They're all, Andre, you know how to finish this line. How can you tell when a politician is lying to you, right? We all know how the line goes. So it's an interesting tell that the banking system down in the States is showing some cracks. Is this related to the Silvergate, which of course is the crypto? Is this related to FTX? Is this sort of part of the narrative and the way that this ultimately plays out? I wouldn't be surprised. But I did find it interesting that BBC was commenting on this, and I actually prefer to tweet out and things BBC kind of news articles, especially about U.S. events, and that way it's maybe a little bit less political than doing like a CNN tweet or something. But European bank shares were getting hit. Japanese bank shares. Of course, the Chinese, actually, I'm starting to read articles that the Chinese want to start making plans for another lockdown. Oh my God, you can't be serious. So make no mistake about it, folks. This 2023 is going to be still a challenging year. And remember, if you go back and watch previous daily briefs, maybe somewhere we have hashtags and stuff like that to talk about them. But I have talked to you guys before that 2027, 28, I actually fully expect another one of these massive inflationary pushes. So we're not done this shit by a long shot, folks. Anyway, rant. It's probably important to try and put this sort of price action into context. I don't think it's necessarily Bitcoin. And if anything, the good part about this was that this kind of took the attention away from Bitcoin proper. You'll notice that, as I had said there earlier, Japan got absolutely destroyed overnight. Europe got wiped out. Poor old Italians. Italian stock market got slammed. German market got slammed, and we're British market. And I've told you guys too before that, the market, less than 1% move, not that big of a deal. As soon as we start breaching 2%, that's when you start paying attention. So yesterday we had a pretty big drop, of course, in the U.S. market. We're seeing further erosion today. But, this is an interesting commentary because Mr. Powell here has kind of said, I'm going to inflict pain on your guys' lives. And Ms. Booth here, though, she's kind of said that, what I see in the market right now, which leads me to believe that this could go on for quite a while, is this is all very orderly. We're not seeing 5% drops here. Yes, we are seeing 2%, which means that, hey, market's getting a bit concerned, but it's not like the wheels are falling right off the bus. And the true irony of all of this is yet another situation where I think this is one of these scenarios. What's good for Main Street is not so good for Wall Street. And then conversely, what's usually good for Wall Street is usually not so good for Main Street. So I think we're in a scenario here where the U.S. economy, and we've talked about this at length easily. In fact, it's a core tenet of my education program, that the U.S. actually, the economy is structurally in a good part of this cycle. And the data actually is coming out that the U.S. economy itself is actually doing pretty good, which actually can justify higher interest rates. The only problem here is that we went through a very, very distended, too long, too far period where people just sort of got used to abnormally low interest rates. And they got used to the idea that, hey, credit is free and you don't have to pay money back. And hell, substitute drama teachers know how to run economies and they just turn on printing presses. It solves all the problems. And Mr. Powell is coming back saying, economy's actually fairly strong. There's lots and lots of jobs. And, if you want to get a job, people want to put you to work. So we got to basically normalize interest rates. which means that we have to go back into the world where money actually costs something. So I don't know whether that was a helpful rant for you, but hopefully it puts into perspective what's going on in the world here. And why would, these kind of fluffy venture cap banking, the whole sort of fugazi about Sam Bankman-Fried was all just basically built on a house of cards. And Wall Street bought the story hook, line, and sinker. And so I wouldn't be surprised if a lot of sort of Wall Street and Silicon Valley, this whole crazy movement of the woke movement in our society over the past 5-10 years, all of this is going to have to be walked back. How painful this has to be, I'm not quite sure. I suppose, as I said, if you can put yourself into a position, I've said this repeatedly, I think pullbacks are buying opportunities. I think our dashboard here with all these 5s and 6s in crypto land is trying to speak to you as investors. I would make the argument that these assets are not shorts, but if they get too far too fast, maybe you just got to cool your jets a bit. Maybe wait for pullbacks before you start getting uber bullish. So in a weird sort of way, I've been telling everybody, on the Wednesday shows and stuff like that, I'm one of these guys, I eat my own cooking. So, you can see where Bitcoin price topped out. This was more than a 50% rally in 2-3 months? I mean, do assets normally go up 50% in 2 months? I mean, come on. I mean, I'm not going to comment too much about Bitcoin itself, but, there is a plan that I have in motion right now where I fully expect to load up on all of these ideas, down through the bottom part of our cycles, right? You can see how far down this thing is, right? All the way down here. I want to load up while we're down here, while we're in the Benner 23 year, thinking about selling into 2025 and early 2026. And so to that end, actually, I did some buy. Like this sushi. I mean, your comments about Mr. CZ and all that. I mean, take it for whatever it's worth. If you want to participate in the venture cap market, sometimes you're going to have names that just go off the board. It is what it is. But, I look at a chart like this, and keep in mind, this is a log scale. If I look at it on a regular scale, I mean, is it worth coming in there and buying like $1 worth of this thing, thinking that, in 2025, 2026, we could, you probably could get a double just off of this rally, but just even down the road into next year, once the halving event comes. I mean, one thing I will definitely not do is take a bet against CZ. That he's outsmarted everybody, and until he goes under, I'd still say he still has a couple of cards to play in his wallet, or in his hand. Maybe this isn't the best fundamental story, but something like this RNDR, love this. This is exactly what I try and talk to you guys about. Then, pullbacks down into the bottom of the range here, I'll be more than happy to buy. And there were actually a couple names that into that dump there in the past couple days, I actually did buy. So I said I wanted to pick up a little bit of this guy off the bottom. I wasn't going to chase. I had a stink bid working at my BFF, my favorite fib, and I got filled there the other day. So I actually bought. And then I told you guys that I actually really like this loom idea. Somebody had mentioned it the other day. The other day it was sitting up here, and I was like, well, I can't buy that. I just set an alert. This one was a little tricky because I don't really want to own BUSD, but I did go in and buy this when my alerts went off and said it was back down to BFF. Went and took some USDT, bought USDB, then went and bought the Loom. And really what I should probably do is just get these coins completely off of Binance. But now I've started to accumulate this one. So just the simple message is that, yeah, this is not going to be the year that you're going to be banging out Lambos. I think this is a year of backfilling. And with regard to things like Bitcoin, You can see where Brian's BFFs are. So at 17,000, would I be okay with buying Bitcoin? Sure. Would I be okay if Bitcoin had to come down into 10 to 20,000 to buy some more? Yeah. It all depends really entirely on the plan, right? And so with regard to this little old lady plan, that's what I do is I basically buy against the bottom ends of ranges, look to sell halves on doubles, and rinse and repeat. In fact, actually, there's one that's getting close to a second car. So we had one site member who gave us this great idea. I was able to sell half on a double, and now it's slowly working its way back down. So you can see here we bought. We're going to sell halves on doubles. You can see the shod order, and now it's working its way back down. And there's Brian's BFF, and I'll step right in. I'll buy my second car. So that's the type of backdrop that we're in. I don't think this is run for the hills. It's the end of the world. Oh, the sky's falling. Of course, the media is going to get you thinking that way. And I also saw, like I said, the media, of course, is now owned by the 1%. So does the 1% buy up markets or down markets? Please learn this, people. And actually, look at the time. I should probably wind this up. We actually have on one of our OGs, Marat, our level 2 instructor, on the Afterparty show as well. So if anything, I think I'm going to leave the tease at that. You've heard my message. We don't need to say anything more. And I want to get off. And Marat, are you on the call here today? I don't know whether he's here or not.
He's not here yet.
Not here yet. All right. Okay. Well, that's cool. So we'll head on over to the after party. And of course, if you are interested, pop on over and join us there. I think we have a 30-day trial still going, so you can actually listen for free if you want. And if you hear something that you like, maybe consider joining our site. Also, too, we'd really like to try and get these views on YouTube and all that kind of stuff. Subscribers, if you like the content, please subscribe. Tell a friend. Somebody in the message there says, I actually get my news from TRI. Well, I don't know about that, but okay. Actually, and somebody's making reference to Canada there, right? Eating starlings. Remember they talked to, some 1% oligarchs. I think they want us eating insects, don't they? So I suppose the one easy way for us all to be forced to eat insects, thanks Bill Gates, is to price chickens. Turns out chicken's actually a specialty product, and only the rich are allowed to eat chickens. I guess that's Klaus's great reset for you. Thanks, substitute drama teachers. Love you. All right, why don't we leave it at that? Tune in for our weekend show, and actually I'll update these weekly and daily and 4-hour prognostications. Believe it or not, and actually I even put out a tweet. I'll finish off with this comment since Marat's not here right now. I actually think that this down move is just about done. Trend line support, and quite often we lose trend lines and then sort of spend a few days just absolutely freaking the public out. Manolo, that's all part of the narrative, right? That was refer back to that banking story that I told you. They really need to unwind all of this. It's an absolute mess that they've done here. And I actually think that Mr. Powell, keep in mind, Mr. Powell is a Bush senior crony. So I don't think he likes this whole MMT woke world. And I think he would prefer that the Fed unwind their balance sheet and get the hell out of being in the mortgage-backed securities business. They had never had any business to go in there to begin with. They kind of broke their mandate from the U.S. Congress going in there. And interesting as Miss got to get her name right. DiMarcino? No, damn it. Screwed it up again.
Yep. No, you had it.
Oh, I got it. All right, DiMarcino Booth. As she even pointed out in her commentary there, they're going to actually try and do a bait and switch here. They're going to talk constantly about short-term interest rates. but they're not going to talk at all about reducing the size of the balance sheet and QT, quantitative tightening. Interestingly enough, I see that in the United States, the M2 money supply is coming down. So maybe Mr. And like we've seen, retail sales down in the States, it's starting to come back down to earth. Mr. Druckenmiller has finally gotten through to probably Powell. And I wouldn't be surprised if Mr. Druckenmiller said, excuse me, Mr. Powell, just remember who's driving the bus here. It's the capitalists who are driving the bus in the United States of America. So get your act together and quit with all this stupid quantitative easing crap, and let's get back on course. Notice substitute drama teachers, they haven't gotten that memo yet. Why they haven't gotten it, I'm not quite sure. But I think substitute drama teachers, they kind of fancy themselves Fidel Castro's and kind of above the law. And I think this guy thinks that he's going to literally rewrite his country's future single-handedly. I don't know how it's going to go, but I've told you repeatedly, the commodity countries of the world as of 2017, 2018 are a short. I've talked to you about Russia. What a fucking shit show that is. What a short. That place is that's a short. You know what's going on in Australia. Standard of living is collapsing there. And of course, substitute drama teachers, you hear me go on endlessly about this commodity nation. So, put it all together, my answer to you is, actually, I like the idea that quantitative tightening continues, the free money days are over, and Mr. Powell has said that he likes the idea of bringing a little bit of pain into your lives. And unfortunately, with something like Bitcoin, that this is exactly what he's talking about. And if anything, to be perfectly honest with you, if you like the idea that chickens don't become specialty meat because they're so damn expensive because the currency is worthless, you would actually prefer to see Mr. Powell do what he's doing right now. You heard Julian yesterday. He went on about how he actually kind of likes to see a bit of pain out there in the world because it means that the stupidity of the economics of the world is now finally unwinding. So I actually like the idea that Bitcoin should calm down here a little bit. How long lasting this is, I don't know. That's another conversation altogether. For the time being, you can see this particular trading plan. This was just a very simple technical setup that I've traded literally for decades now. It worked really nicely, but so what? It's just another bus. I did see somebody on the site get very, very excited about a leverage trade that worked for him. And a couple OGs actually came on and tried to sort of talk him down a little bit and just say, we actually want to make this trading stuff kind of boring. Don't get too excited about, a win. I mean, a win's a win's a win. That's great. But, let's just, it's just another trade. Next bus in 10 minutes. Okay, I'm going to try and stop talking now. So that was an hour or 50 minutes. Sorry, everybody. That was supposed to be a half an hour. Hope you got some value out of that. Maybe Chris can cut out some of the fluffy stuff that was a waste of everybody's time. I don't know. PMA for the win. Let's head on over and continue the conversation in the after party. Let's see if somebody can trigger me and get Brian all excited about substitute drama teachers again. All right, everybody. Have yourselves a great day. PMA for the win. All the best. Congratulate me on a very good trade. I got to say, that was quite nice to see that play out yesterday. Slow and steady wins the race. Actually, the only day trade I did today was I shorted a bit of gold here this morning, but that trade didn't work, so I just covered it at scratch. So you can see my day trading here today. I'm still talking. Why am I talking? I took a short shot. I covered it at scratch, and you can see this is a mess. So there's really nothing for me to do. And day trading wise, I haven't really seen anything else that really caught my attention. So right now, as for futures trading, I'm just on the sidelines, just enjoying my popcorn. Okay, everybody, slow and steady wins the race. PMA for the win. All the best, and bye for now.